You know, it wasn't really the easiest economic environment for luxury goods in 2015, but despite that, we think we'll probably end the year similar to the year before. Probably a couple of points ahead when we look at it in terms of local currency, but once we translate that into dollars, considering really the weakness of the euro and the yen, we're probably a couple of points down. But to be honest, we'll have greater clarity in a couple of weeks' time. We're still a little bit early on our hard data, but you know, that's largely what the picture is looking like. And actually, given the environment within which we were operating, actually not too bad in 2015. You know, there's no doubt that China's slowed significantly, and that has had an impact on the diamond jewelry business. But I think important to break it into its sort of constituent parts. If you actually look at retailers operating stores in the mainland, continued growth in China. We hear a lot about the weakness of the economy there, but we think that we continue to see growth, albeit not at the really extraordinary rates of the previous years. But the appetite and desire for diamonds in the mainland is still strong. The challenging area around China is largely the changing flows of tourism. And so we hear, although it's hard to get the hard data, we hear of strong Chinese buying in places like Europe, in Japan, even in Korea. And what that means is they're diverting from Hong Kong. So in Hong Kong and Macau, we see a really, really tough environment for the jewelers as those consumers, particularly the affluent ones, move elsewhere with their dollars. And that does have an impact on our industry because the big Chinese jewelry chains who operate in the mainland also have very strong presence in Hong Kong and Macau. And obviously, with those tourists heading elsewhere, it's having an impact on them and thus on the industry as a whole. You know, we're now right in the excitement of Chinese New Year, so we're obviously too early to call any end picture. We have invested marketing dollars to try to maximize the opportunity for us. There's no doubt that, again, because of the impact in places like Hong Kong and Macau, and with tourists not heading there, it's going to be tougher than previous years, but we remain optimistic that there's good opportunity if we capture the tourists in the places where they are. Brands continue to be extraordinarily important in all the major consumer markets and very much a growing phenomenon, particularly in the key markets of America, China, and emerging in India. So brands in our sector still really driving, I think, our future and driving growth in the industry. And we continue to see this growth in the digital universe. Interestingly, probably a little bit differently, we had seen the sort of pure play internet players emerging if we look back over the last 5 years or so. Now we see much more of a mix between retail stores and their online presence. And that mix, much touted of the famous bricks and clicks, but actually in our sector we see that as the area that's generating the most interest. We even see the pure play internet players moving into stores. So I think that's probably something we'll see more of as we look forward. Do you know, in what was a pretty challenging overall market, where where there wasn't much growth in the sector, actually for Forevermark, it was another year of really strong growth. We think we'll end up somewhere between 35% and 40% in terms of sales versus the year ago, on a network that's increased by about 15%. So we're seeing not only growth in our network, but more importantly, really strong like-for-like sales. So we remain, very bullish about and aggressive about our growth opportunities. We think it's a sign, again, of the strength and importance of brands and those messages which help to create real value for consumers. Well, for us, it's, keep charging forward. We want to continue to expand our network of retailers, selectively, importantly, but continue to grow with good retailers around the world. We want to add new markets. We're looking at places like Korea, like Hungary, like Thailand, France. We want to improve our position within Europe, particularly targeting those tourist flows. The Chinese tourists, where they're ending up this year, different places, we need to be there. So for us, it's a continued year of expansion and to continue to focus on those points which are key to us. So the concept of really diamonds beauty and beyond the 4 C's, what else consumers need to know to find a beautiful diamond, a focus on responsible sourcing, which we think is increasingly important to millennial consumers, actually all over the world, not just in the Western markets. De Beers Diamond Jewelers is finding quite an interesting market. It was a good year again for us in 2015. We saw continued growth for the brand, particularly in the high-end sector. I think where De Beers Jewelers really has a reputation for being able to bring those really exceptional, beautiful, rare diamonds to consumers. So that'll be our continued focus for De Beers Jewelers. One of the advantages, in a way, that the De Beers and the diamond industry have is that, the foundation that we have in terms of the desire for diamonds, which remains very high in all of our key markets, and the strength of that foundation that comes from the diamond engagement ring, which is in many ways immune from the impact of economic ups and downs. So that gives us a big advantage. And I guess that's summed up by the famous advertising line, "A diamond is forever." I guess part of the news, particularly for Forevermark, the marketing arm really of the De Beers Group, is that "A diamond is forever" is going to be a lot more visible within our marketing. We relaunched it in America on television, and we'll be rolling it out around the world in 2016. I think De Beers is committed to making sure that there's desire and demand for diamonds. We look forward also to doing it collectively with the other producers as part of the Diamond Producers Association, which is now getting up and running, and looking forward to making also a contribution to the task toward the end of this year.